we're still waiting for them to. Yeah, we're still waiting for them.
I remember that. Let me. All right, we are live on this glorious tax day in the United
Yes.
States.
All right.
Everyone's favorite day.
Yeah, I guess the pain of the impending doom of tax day has now arrived, or the impending doom is now folded into the past. We're now it's now here in the present, and now we have to contend with all of the things that happen over the next days and weeks as people reconcile and otherwise get caught up on, or if they filed an extension, getting all their, you're taking even more time to do things, or probably the better way to articulate that is having to continue to chase after people who said they were going to provide certain things but haven't yet, and put you in a pickle, and all of the emotional trauma that comes along with figuring that out and deciding whether or not you're going to find someone else for next year, and how to get, at least from my perspective, I'm wholly motivated to have more of my ducks in a row by the end of this year for next year's filing season, so that we're not running around like chickens with our heads cut off at the 11th hour.
I'll
But
tell you
you know
what,
how
man.
things.
It doesn't matter what you do. Like you can be as prepared as you want, and there's always some issue with some investment, or something doesn't go as planned. And I think the point though you said there was the most important thing is that, I mean, it is traumatic. I mean, this is every year it's the same thing, and the rules change, and you think you're doing everything right, and for the life of me, I don't know why this cannot be a simple thing. To me, what makes sense is, like, look, and generally, I think taxation is theft. To put it bluntly.
Yep.
But I'm a U.S. citizen. I do everything I can to play by the rules, so I pay it, right? But why they can't just do, if you're going to tax, like, make it a 10% tax across the board, and have some sort of consumption tax, like. There's a lot of really smart people in this world that could figure this out to make it really simple for everybody. But at the end of the day, how much time and productivity and labor and human life is wasted trying to figure all this stuff out? I mean, that's the sad part to me. The money part
Truly is.
it is what it is, right? Like, but this and in crypto, there's all kinds of people that have, as a U.S. citizen, you're truly in a unique situation, because if you want to live somewhere else and escape taxes, you have to renounce your citizenship. Like, I love all these people that are like, I'm going to move to El Salvador. I'm like, that's great. I'm sure it's beautiful, but you're still going to pay U.S. federal taxes. Like, you can't get out of it unless you're out. And then if you want to leave, you pay an exit tax. If you're worth over $2 million. So. Or make over a certain amount of money. So there's you're kind of trapped in the system, and it's one thing when the system's working for you, but man, lately it does not feel like they're doing the job for us, right? It feels like they're doing the job for them more and more every day. So, but that being said, all we can do is there's one answer. It's make more money. Unfortunately, you just have to keep grinding and do the things you think you can to better your life. And so there are benefits, though. As of today, we are technically still free, and the United States is a great place to make money. But we will talk about something here shortly after we talk about price. With the SEC and the way the government's treating crypto, you might see people and companies start to leave and go to jurisdictions that treat them better. So I think what I wanted to start to talk about today was, Ted, I'd love to get your thoughts on the recent Bitcoin price action. We had a little dip yesterday, and we've promptly broken back up above 30K. So if you want to chime in and give your thoughts on what's happened here and why you think
I would
that is.
be downright delighted to do so. Thank you very much. I thought you'd never ask. So let's rewind the tape and the clock approximately 24 hours ish. yesterday's broadcast, we were talking about how Bitcoin had retraced from the most recent high into a little range back to prices that hadn't been seen for a week. A whole week had gone by, and we were back to a price level that was getting some people in a little bit of a tizzy. But I want to point out, I don't know if it's visible on the stream. I think our faces are covering the RSI.
I can move it up. Give me a second here.
The what I'm trying to communicate is, you see that the RSI dipped pretty heavily there, and we talked about this yesterday, that there was a clear dislocation or divergence. It looked like, or what I'm trying to communicate is, as the RSI was diverging to the downside, the price action was staying steady. Okay, that's that's a thing that in markets and in trading, what you're looking for, or what people tend to look for, and I know that I was groomed to look for this, were divergences, dislocations, and situations where the things that mattered, price action, were telling a story about what the market was pricing in to happen. And what I think, and now there's for every human being that exists and looks at the same chart, there's everyone's perception is wholly unique and different, and no two are the same. But what I'm trying to communicate here simply is that we saw this RSI move sharply to the downside and touch the 30 level, which is a level that to the downside you pay attention to. And price had been trading in a range. Effectively, you might call it, there was a bunch of distribution among market participants, and price pulled back a little bit. But what was most important is that the RSI had come way down to a level that was considered to be extreme. And what you're looking for, again, is extremes. And price stayed in a basic channel. RSI was heavily to one side, meaning to the downside, but price hadn't followed. That was something we talked about yesterday when, and I made the statement that, from my perspective, that was a clear indicator that something was or that the sentiment was mispricing the market, and those who were selling were making a mistake, in my opinion. So I added to my Bitcoin position yesterday below 30,000. Now, I'm not a wizard, and I didn't predict this move, but I made the assumption and made the decision, more importantly, that I was willing to add to my position at that price because of this dislocation or divergence that I saw in the place that mattered, which is price action, factoring nothing into what I've read or people's opinions on Twitter or anywhere else on the internet, but only from my perspective, what I thought was going to, quite frankly and selfishly, benefit me, as all market participants should be selfish in that regard. And we see that price has now come back up to the level that it was just days ago, and we're pushing up against, or in market terminology, we're retesting this resistance level now. And that is a very interesting or a very interesting thing that's happening right now, is given all of the conditions, all of the indicators across the board economically, whether it's domestic or international, the market appears to be pricing in a future where Bitcoin moves higher, and it's all centered around where the price has been and where it has come to. And it's now pushing up against a level that was met with a lot of selling pressure or resistance and wouldn't go higher. There's just too much supply at that price. So it has pulled back a little bit. There's a lot of demand at that slightly lower level, pushed it back up. And this tug of war, it actually goes this way instead of this way, but you can think of it this way. This tug of war, this battle of wills, where people are putting their money where their mouth is playing out on the chart. And if price continues to increase or eke forward, in a manner of speaking, it can trigger some interesting price action to the upside where people who are positioned short either get forcibly liquidated or they decide that the risk rewards are no longer in their favor, so they'll cut their position, meaning if they're short, they're going to buy, and this buying pressure will move price to a higher level, uh, allegedly, if that's how it plays out. So we'll see what happens, but I think the strength the strength to the upside is showing itself by way of a divergence that was exposed on the chart, and now it's moved higher. So that's my analysis.
Yeah, no, great analysis. I mean, you're dead on. You know, and I've paid attention to divergences, but when you explained it to me yesterday, it made a lot of sense, right? And I think a lot of this with charts and looking at this and price action is just doing it and just getting in there and taking a look at every day. And I think a lot of traders too, like again, there's trading and then there's investing, right? There's two different time frames you look at. But when it comes to trading, you can use all different sorts of kinds of indicators, but I follow some people and it seems to me they keep their charts pretty clean, right? So there's patterns and different things to pick up on, and what you picked up on yesterday was one of those patterns that shows it like a probabilistic expectation that the market could move higher when you see that bearish divergence, right? Because that's all trading is. It's probabilistic bets based off market conditions, right, and time frames and all those things. So I think you were spot on. I like this kind of analysis because it helps me frame my own thoughts around this, and I always like to keep the 30,000 foot view. Where are we in the business cycle? Where are we in the 4-year cycle? And what's going on around the world? Because this helps you when you kind of look at it on a day by day basis. You can get lost in it, but you have to just remember where we are, on the macro level too, to kind of help you frame some decisions. But it looks like the overall market is enjoying upside. We can flip over to Ethereum here real quick. And let's see, we're on the daily chart here. And what you've seen here is Ethereum's had some very nice price action after the upgrade. And so, that continues to play out positively for Ethereum. And I really think, this is something interesting we've talked about before. You're going to get an asset that Wall Street can look at and say, this is a productive asset, and benchmark a yield off of it, right? Or the yield from ETH will create a benchmark yield for all of crypto, right? And so that's something that I think Raul Paul has talked about a lot on Real Vision, and I'm starting to hear echoes of that in other kind of channels. So if you want to quickly go over some price action on Ethereum, that'd be great.
Sure. If you could hit the 4 hour in trading view there. I think so. To make to have some understanding of like the different, or to share my perception of using lower time frames like a 4 hour chart. It's a way to look at a one. So you look at a daily chart, you can see what happened that day. We were just on the daily chart, and it told a particular version of the story. And really, the story is something that we fabricate, or I shouldn't say fabricate, because that's the connotation is we put together a story in our minds about what we think is happening. And when you look at the daily chart, you can see from one day to the next what the price action was. But it's not possible on the daily chart to look inside of a daily candle, for example, and understand where price was. You're just looking at this one box of a day, and some things could have happened necessarily inside that daily time frame. So looking at the lower time frame, like the 4 hours, a way to look at 4 chunks of a day. And the interesting thing that I see here is that going back to about the 8th of, I think the 8th of April ish, is
Go over here. I don't think this shows up on the live stream, by the way. So
and that's okay. Actually, right there is a great spot. Yeah, Monday, April 10th. Okay, so and in price action terms, and how these indicators are kind of working together on the alpha RSI, which is a thing that we have. RSI had been more oversold than not a couple days prior. You don't need to articulate that with the mouse or anything. Well, yeah, actually, right there. That's so that Sunday price RSI had come down. Price was still sideways, and we were in this orange volatility squeeze box, which is a really nice indicator or a nice function of this alpha suite. So what we were looking for is for price to move outside of the box, or price action to diverge either to the upside or the downside, and tell the indicator that we're outside of this box now, and that meant range expansion, meaning range in terms of like on the time frame that we're looking at, price traded in a particular range before we went to the next time frame, or the next the next 4 hour box. So price moved up, and then price pulled back to that green support level a day later, which is that red candle to your right. And interesting thing that I'm observing here, looking back from the 10th all the way to now the 18th, is that as RSI has oscillated between the mid level, the 50-ish, and the 70-ish, and even poked through and come back, it has retested now just in the last day or so. I'm talking about the RSI specifically. The RSI has been oscillating in the upper half of the range. Yeah. And it seems that price has been moving in the same. And interesting thing here now, RSI didn't push way lower. That would have been even more bullish, in my opinion, had price stayed the same and had the RSI dive down to the 30 level. That would have told me that there's probably, and remember that we're talking only in terms of probabilities here. I would have made an assumption in my mind that it's probable that there are a lot of people getting net short here, yet price is holding in this range. That means that despite all of this heavily short positioning by market participants, there's still enough support in terms of price action that this has a chance of people unwinding their short positions, because there's no follow through to the downside. And that's really the question that I've learned to ask is, in these bands where the price is stuck in this range for a period of time, the question I ask is, why has there been no follow through to the downside? Meaning, if I'm bullish and I want to hold this asset for 10 years or 3 years or a year, the question I'll ask myself is, why, if I'm seeing a divergence to the downside in RSI, for example, and I'm seeing price action stable and in a range, is the question you ask is, why hasn't it followed through to the downside? Because typically when strength leaves the market, people that are trying to offload the asset are going to have to sell it at a discount, and price action will follow to the downside. But in this case, or on the Bitcoin chart, it didn't. But in this case, we see RSI oscillating in the upper half of the range, meaning the strength is mostly there. And the price action band is indicative that there's plenty of support. And you see that green line has followed price up. So price diverged to the upside a couple days back, and the green line has started to follow, because that is an average. And as we see here, I think we can, if RSI comes down and touches that 50 line again, I think that given the uptrend in RSI, like meaning the overall uptrend, meaning it's skewing a little bit higher, meaning strength is coming into the market, I think the price has the potential. Remember, this is just in terms of probability. I think the more probable move in terms of follow through is going to be to the upside, as more and more people make the assumption that, okay, the recent event was a nothing burger. People are going to, more capital and more participants are going to flow into this market for various reasons around staking and being a productive asset and institutional levels of involvement, and perhaps starting to transition towards this idea of climbing the wall of worry. As more and more of this SEC madness gets resurfaced in the media, it tends to scare retail and other types of investor types out of the market. And the institutions, I can promise you, who are steeped in macro and steeped in understanding human behavior, are the ones that are watching these pullbacks in price where RSI is greatly oversold, and understanding that this is a buying opportunity, for example, and they are positioning for 6 months, 12 months as the wet blankets start to come off. the wall of worry gets chiseled away.
No, I think that's a great transition. I think it's a great explanation uh, of price action and probabilistic, thinking, and a great transition to what we kind of wanted to talk about today, and that's the wall of worry, right? And this is a concept in markets where asset prices continue to go up despite you know all of the negativity you see on the media. And I had this thought today when I was getting ready for this, and I've seen this on Twitter a little bit too, so I can't say it's my own, but you know the algorithms today on YouTube, TikTok, Facebook, all of them, they're designed to get clicks, right? They're not designed to help you make money, right? And so what gets clicks is all the doom and gloom, all the doom scrolling, the world's ending, dollars going to zero, Bitcoin's going to zero, Ethereum's going to zero, everything's over, run to the mountains, buy guns, buy gold. By the way, here's my gold link,
Yep.
get an affiliate, and there's nothing wrong with that, right? Like, that's all fine and well, but you always have to remember, like, I always laugh when you get these people on these YouTube things and yeah, we like Bitcoin, it's fine, but gold's been a store of value for 5,000 years, and here's my affiliate link, and it's just like everything they just said goes out the window because it's like, you're promoting this asset and making money on it, and so it's hard for me to say, okay, even though I like gold, it's fine, like I felt like a gold member from Austin Powers. I love gold.
Yeah.
But that's Peter Schiff. He should dress himself up in gold and run around Puerto Rico. There's this idea that like these algorithms are there's getting clicks, and so yeah, there's a lot of bad financial stuff happening right now that you have to pay attention to. It is very worrisome. Like, let's not sugarcoat it, but you got to remember what gets clicks and what drives money is what these algorithms favor, right? And so right now you have stuff going on with people are very much talking about the transsexual community, right? Okay, and that's not a comment on anything other than the algorithm knows that people click on this stuff, right? And so in your feed you see more and more and more and more of it. That doesn't mean like this is the world's most important issue. It just means the algorithm knows that people are clicking on this, so you get more and more of that type of information. Well, it's the same with like this doom porn of the economy, right? And like I said earlier, there is a lot of stuff going on that you have to pay attention to, but it's really hard to see that stuff all day, then turn on the news, turn on TV and see all this bad data or all this stuff happening all over. And that's why it's called the wall of worry, right? Because what's happening is despite all of that, asset prices continue to rise, right? And you've got inflation, you've got high interest rates, you've got but markets are forward looking, all right? And like your term you always use is that there's a wet blanket over the markets holding the price down. And as these wet blankets become non-issues, you could say for the Ethereum price that the Shanghai upgrade was a wet blanket, that people didn't know what was going to happen when that was released, and now that wet blanket has been removed, and what you've seen is price action move higher. And so there's wet blankets on everything right now, and the people in the know, the guys that have the homes in the Hamptons, they understand this, and this concept of climbing a wall of worry is something that retail investors I think struggle with. And I think in the Bitcoin and crypto markets specifically, I mean, unless you're in this market right now, retail's not here. They're terrified of this stuff. I mean, they got to wake up every day and see, these senators that, are essentially irrelevant dinosaurs get up there and talk about on, whatever program, government propaganda channel you follow, how, Bitcoin's bad and it's destroying the environment. And it's like, guys, like, it's not even true, but it scares people, and there's a wall of worry created. But for us, people that are paying attention, that actually understand what Bitcoin is and what these crypto markets are, it's an opportunity, okay? And so that's the way I like to think about it is, when you see all of this stuff, this coordinated FUD and fear, uncertainty, and doubt, market participants who have asymmetric knowledge, if I could spit that one out, take advantage of that. And I think that's where we're at right now with these crypto markets. Now, that's not to say that like something couldn't come up and that you shouldn't be positioning yourself in other ways to protect against some catastrophic event, but that's always on the horizon forever. And if you always think like that, you're just going to have cash under the bed and sleep with 7 guns around the house, right? Like, and that's, I'm not saying that's a bad plan right now either, but there is opportunity there is opportunity out there, if you can get over this wall of worry.
Yeah, the thing that I think, the thing that has helped me, there's layers to this understand. There's layers in the process of coming to have a greater understanding of financial markets and the dynamics. One of them is the human behavior factor, and the best way I can make this, or I can articulate this, is to talk this idea of retail investors is something that the term retail investor gets thrown around all the time. And the best way to understand what a retail investor is to understand what a consumer is in the world, like in the regular free enterprise system where people produce products or offer services and make them for sale to the public. And you think about the participants in the supply chain or in the value chain. There's usually like a product. There's like a raw materials provider or supplier that makes that like produces steel, for example. They then sell the steel in large quantities to a wholesaler. The wholesaler pays a price to the producer, and then the wholesaler has to turn around and resell it. And what they do is they break it up like a drug dealer. You take your brick of product and you cut it up with other things, dilute it a little bit to make more of it, so you can part it out. Okay.
Ted, you sound like you know what you're talking about.
I mean, I'm just learning these things from like I'm reading books, and I mean, I don't like necessarily that the drug dealer model is the quintessential like business plan. All right, I don't like it, but it'll help illustrate the point. But I'm gonna try to do this with something more wholesome and more.
Oh no, I like the Coke example. Let's go with it. We're here.
All right, well, let's roll with it. Okay, so the folks in the land to the south where they grow and produce this material, this product. Okay, it gets packed up into whole units, and I think this is probably where you can make you start to understand this concept of wholesale, meaning I will buy in large quantities in pieces that are too much to sell to the individuals on the street or in the market, like in the store, like Costco aside for a second, you wouldn't buy an entire pallet of Coca-Cola, okay, wink, wink, and because there's 100 cases on it, and like myself, if I were inclined to drink such a thing, well, let's do it. Let's use carbonated water, which I would drink. I could call a wholesaler and say, hey, can you sell me an entire pallet, 100 cases at one time of this fizzy water, and they might say, go pound sand unless you're going to buy an 18-wheeler's worth, and that I can have it shipped to your house. That'll just. So I'm trying to illustrate and really like ingrain in anyone who's under the sound of our voices here that this idea of retail investor comes back to somebody else earlier on in the stage in the process of taking these financial assets, just like you would take raw materials and sell them to a manufacturer. A manufacturer would produce something in quantity, sell it to a wholesaler. The wholesaler then sells it to a retail store, and then a retail buyer shows up at the retail store. The point is that the cost of these things gets higher as you go through the chain here. And at every point, they're supposed to be adding value. The manufacturer adds value by producing something useful. They do it in large quantity. They sell it to a wholesaler. The wholesaler adds value because they're willing to warehouse large quantities of a single product, for example, and then get it into the distribution chain, the shipping channels like FedEx, UPS, and they're willing to pay UPS to take smaller chunks of this to another location. And then the retail store, which is the storefront, which is where regular Joes, Schmoes, and Jane Schmanes can go and buy individual smaller units of, say, this. I can buy one thing of soda water, but I'm going to pay a lot more than it costs to produce it. But you see, there's reasons why the cost of production, and people need, people need to make money along the way so they can stay in business and stay solvent. The same applies in the financial asset world, where, like, I'll use gold for example. The price of gold starts, or I'll start on the other side. Like, if I want to buy some Pax G, okay, it's an Ethereum token that is backed by a corresponding amount of actual gold somewhere in a vault. The gold lives in the ground. Somebody comes along and says, I'm going to burn a bunch of money and energy and hire people to extract the gold. The gold's going to be sent to a producer, a production facility. It's going to be shaped and formed. And at every point, they're selling it to the next entity who's adding a markup to it. And by the time it gets to the market, it costs a lot more in just raw dollar terms or raw fiat terms than it did originally. So that's what I wanted. So all of that was to help set the foundation. Is that a lot of times, by the time, like, you and I, and let's say we have a job and we're working and we're contributing to a retirement account, and the retirement manager, the account manager, is making choices about which financial instruments to put into our retirement account. They're going to the retail market. They're going to the open market, like the shop, like the grocery store, which is the final stop before the end consumer buys these things. And they are buying stocks that were traded by our larger entities, who perhaps paid less than retail value because they bought them in large quantities. They bought them at a time when someone else just needed to offload them. There was a lot of negotiating and positioning around, okay, well, I'm going to buy these 100 million shares of Facebook stock, but I'm not paying retail. I'm going to pay a 30% discount to buy them in bulk on the like off the open market, perhaps, or over the counter is another way to think of it. And then we'll put these on Schwab, and then retail investors will come and they'll buy from Schwab. But guess what? Schwab's going to sell it to you at market price, which has all of their profit and expenses and costs and everything else baked into that price. So what I'm trying to say here is that retail investors are way down the line, and also they're also way down the line in terms of when information makes it to the mainstream and we as regular retail guys and gals hear about it. Facebook's going to do earnings next week, or some other thing that's good for some other asset like Bitcoin is happening next week. I can promise you the supply that will be made available on the open exchanges in the open market, that retail guys and gals like you and I buy at, the price that we're going to pay over here is much higher than it was when others who were bringing it to market. So that's the thing I wanted to try and like illustrate primarily, is that there's this, like, the end of the line is the retail buyer in the real world when you're buying shoes and sweatshirts and headphones and things like that. We're not buying in wholesale quantities, and that's the key, is that the quantity. I can buy 1 gallon of milk 6 miles from my house any day of the week that the store's open, and I'll pay a certain price. But if I wanted to buy 100,000 gallons of milk, I wouldn't go to the retailer. I would go to a distributor or a wholesaler who stocks much greater quantities in different unit sizes, and I would be able to buy larger quantities at a lower unit price if I were to choose to do so. So that this applies in the financial asset world as well. And so, but now onto the wall of worry, or this idea of the wall of worry, is that when the sentiment is negative and price is going down, the retail investor trader type tends to trade with their emotions. And when I say trade with their emotions, they tend to look at information that has showed up at the end of the line, meaning after smarter money, bigger money have touched this asset and made it available to either sell, or they are available to buy. The price, let's say the price is coming down, they call it the slope of hope, price going down. That's where people they're initially like, oh, it's okay, this is just a dip. Oh, wait a minute, what's happening? And I'm going to read I found this graphic that I sent you, Josh. There's people that are permanently bullish. They're like, oh, I'm going to buy this dip. oh, well, I'm in it for the tech. I'm going to average down. I'm going to try and catch this knife. Now that prices come way down, I'm going to dip my toes in the water, and then price starts to bottom out. And there's an idea of this thing called a bottom feeder, according to this chart,
Let
this
me pull it
graphic. And
up
I think,
here. I'll pull it up so people can see it.
yeah, sure, I think that would be really super, because I think it'll help illustrate, and I can make it relatively quick. And I think the chart will do or the image will do most of the talking.
All right,
And
I've got it pulled up here where it's on the stream.
okay, super. So what I was trying to illustrate here is the slope of hope is where the average retail investor is feeling like they're getting into trouble. And it's easy for us as humans to think that this is the end and we need to get out. And a lot of times people are selling. Retail traders tend to sell as you get further down the slope. And the question that you need to ask yourself is, if someone is selling anything and they're able to make a transaction, meaning if I log onto my exchange and I don't like the price action of Ethereum, for example, and I want to sell it right now, the exchange guarantees that there will be a buyer. But the real question underneath that is that, wait a minute, if I'm selling, who's willing to buy this asset at this discounted price? Meaning, if the prices come way off, like when Ethereum was $4,000, there were people that were buying it hand over fist. And then it pulls all the way back down to $800, and people were dumping their positions at that, saying, oh my God, it's over. But who on earth was buying Ethereum at 800 when it was previously worth 4,000? So that we get down into this bottom feeding thing here. And now on to the point, the wall of worry. As you see, price action starts to move higher here, and I'm going to bring like you start to get what they call bargain hunters, momentum players, and then premature eradicators, profit takers. You see the profit takers. Where are the profit takers on this particular chart? They're not at the top, because nobody really knows when the top is. People tend to take profit when a bunch of people are, like the saying is, if everyone around you is buying, you should be skeptical and you should probably be selling. And on the other side of that, if everyone around you is selling and panicking and trying to get out of their positions, you should probably consider buying. And that's the Warren Buffett's be fearful when others are greedy and greedy when others are fearful. And then you see the performance chasers don't even show up until we've been climbing the wall of worry. So what I'm trying to say is that in one definition of the wall of worry is that, and I quote from a Google search here, says that it's the financial market's periodic tendency to surmount a host of negative factors and do something key, keep ascending. Okay. And what I think is going to happen, and I'll wrap it up here on this particular thread, is that I think what we see is there's all of this FUD in the media. Price has continued to move up so far this year, and we're at the point where I think people are going to talk a lot about the wall of worry, because there's been FUD after bad thing, after government, after threat, after baseless, vaporous words from political talking heads, and all of this stuff that people never happens. Okay. The wall of worry is alive and well, and it's probably going as we traverse the $30,000 to $40,000 range in Bitcoin, for example. I think the wall of worry chatter gets even more intense, is a way I'll put it. And I think you won't. At the end of the year last year, when it was just absolute, like, this thing is over, Bitcoin is going to 10,000, it's going to 3,000, blah, blah, blah. It was still 15,000 after all of the fuss and madness and just horrendous things that happened last year. All of the bad actors that tried and failed to kill it. The smart money was moving in. The wholesalers were moving in, buying in wholesale, large quantities at a discount. The distributors were getting ready to start distributing. So as the price, as we reached the bottom feeding stage in the wall of worry and started to climb the other side, the FUD blankets came off. It was a new year. all of the wash trading was done in 2022 at the end of the year, and all of the good news in this in financial market parlance, the liquidity is coming, the recession is coming, the Fed's going to have to cut rates maybe or stop raising. They're going to have to service the debt, which implies more money printing, et cetera, et cetera, et cetera. It started the other way, and now I can promise you also is that as we get into this, if it hasn't happened already, there's a lot of institutional offloading that's happening, or they're getting ready to offload and take 100% profit. When we get to that point where Bitcoin hits like 32,000, 35,000, and we have in 2023 we've seen Bitcoin rise 100% in pricing terms, I can promise you there's going to be some profit taking, because who in their right mind has ever gone broke taking some profit? I'm not saying I'm going to do it, but the point I'm trying to say is that we're probably going to see this wall of worry climb, and I can promise you something else too. As sure as the day is long, is that the media are going to find everything they can talk about. You're going to see on CNBC, oh, the wall of worry, the wall of worry, the wall of worry. It's coming. It's the only thing I can predict.
No, I think that's a great explanation, great chart. I like how you tied all that together. We were going to get into the SEC stuff, but let's push that off till tomorrow.
Yeah, good idea.
That's probably a good place to wrap it up. No, I thought that was great. We talked about Bitcoin price action, Ethereum price action, the concept of the wall of worry, and I think that was a good overview of that. I mean, I definitely, this chart is great. I mean, it's one thing to talk about it; it's another thing to kind of visualize it. And it's funny how this plays out over and over and over again across different markets and different assets. And I liked your analogy, the wholesalers, because you have wholesalers in the financial industry too. So, think about, large players that own exchanges, right? They've got to pick up Bitcoin somewhere, right? That's kind of, same with people that own Bitcoin ATMs, right? Like, sounds silly, but, they need supply, And so it's fun to think about from that perspective as well. So I think that wraps it up for today. You have any other words of wisdom before we wrap it up?
The last thing I'll say is just it has the potential to do you some good to start thinking about the goods and services that you buy as a retail consumer, like the end user, like you're the final stop on the train, the route, if you will. Like in the old days, when your milkman would show up at your house and he would take the little metal basket and they would have 1, 2, 3, or 4, however many bottles of milk you ordered, and he would drop it on your front doorstep and then get back on the truck and leave. Now, they sold you the milk for one price. What do you think they paid for the milk? And I can promise you, they are not selling it to you unless, I mean, as often as they can help it, they're never going to try and sell it to you at a loss or less than what they pay for it, because that means they're literally in business to lose money, and they could not sell you milk, and they could be more solvent than they were selling you the milk. That's just some like basic business concepts there. Like when you're operating a company and it's costing you money to do it, you could literally shut the whole thing down in some cases and be in a better position financially. But that's a whole nother can of worms. The thing I'm trying to illustrate here is, think about the milkman in the old days and how much they were charging you for the milk they delivered, and think about what they were paying for it, and think about the things that they had to pay for to make all that happen. And I can promise you, they're gonna take they will have taken the position of, we are a wholesale buyer. We are only going to pay wholesale prices. So if you want us to be a customer, you're going to have to sell us in quantity, and you're going to have to give us the best unit price. And this is the same thing that happens in the financial world when when Coinbase or some other exchange needs Bitcoin. They will be a buyer, but they will always be a wholesale buyer. They will never pay end user retail pricing, and they will buy hundreds, if not thousands, of Bitcoin in one shot, because they're going to turn right around, cut it up like the drug dealer into small pieces, and sell it to their retail customers at a markup. And I'm thankful for you triggered something with the ATM example. If I want to do this just to do it. There's a Bitcoin ATM like 80 miles from here, so I'm gonna have to make a trip out of it. But I want to go and I want to buy Bitcoin from an ATM, and I can promise you also what happens is when the people who run the Bitcoin ATM, they bought Bitcoin at a discount because they bought it in quantity. They're going to take a little piece of it, however much I want to buy, and they're going to mark it up
Oh,
substantially and
dude,
sell it to
dude,
me.
there's one right up the street. This I laughed my ass off when I saw this. For the low price of $1.30, you can buy one USDC at the Bitcoin
That's
ATM.
an even better example. Like,
I was like, who is doing this outside of fucking drug dealers? Like, this is crazy. Like,
it's a great
like
way to launder money, quite frankly. Like if you, I mean, one USDC is so USDC is a stable coin. It's pegged to the value of $1. But the point that this illustrates the point even more magically is that the ATM company will buy a USDC off the open market because they can at $1, and they will turn around, mark it up 30%, and sell it to you for the convenience of being able to do so out in public at an ATM. And you're paying a convenience fee for something that, if you were smarter, I'm not saying you're stupid for using an ATM, just so I'm clear, but if you were smarter and you could go to like a Coinbase, you could ACH your money in for no cost. You could buy USDC and pay $1 for the USDC and have it in your possession in the same way that you could go to an ATM that bought USDC for $1, marks it up 30%. And I
I
mean, I
mean,
don't know how else to
five
illustrate that.
percent, 5% is a convenience fee. 30% is a straight up. I know you don't have any other option
That's, I
fee.
mean, extortion maybe. I don't know. Is that even the? Am I in the right ballpark
But look,
there?
I could see, there is reasons to pay that if you want to have, I don't even know if you can do it with no KYC. I mean, do you have to enter your information? I've never bought Bitcoin on a Bitcoin ATM. I just, because of the
If you're
fees,
using your
right?
debit card, then you've KYC with your bank, and you have a debit card, and
Yeah,
pop that bad boy in there. Or if you use
the
cash, I mean,
ones, I think, like the one, for instance, like the ones in El Salvador, I don't think they're like that, right? I think they're just like, reasonable, like, but the ones here, at least the ones I've encountered, those fees are crazy. So, unless that's not the best way to do it, is what I'll say. But anyway,
well, it certainly isn't the best way, and we'll wrap it up there. It's just I would encourage people listening just to start to get an understanding of how goods and services move through the economy, and how they get marked up in price, and how they get broken down into smaller and smaller units for sale to the retail, the end user, the end buyer, and then start to understand how that works in the financial world. Because I mean, we're looking at a computer screen. You can't see, you can't drive to a distribution center for Bitcoin.
well,
You know what I
and the
mean?
other thing too with these ATMs, like, I'm just thinking in my head, like, it doesn't even make sense to do this if you're trying to do something illicit, because you have cash, which is untraceable, that you've now exchanged for something that's pseudo anonymous, that can be tracked if they so desire. And, like, look, Bitcoin is pseudo anonymous. It's if somebody knows your address, your public address, they can track your Bitcoin. So the whole I'm just laughing in my head, because, like, I just don't know where this makes sense for anybody to do that, and pay those kind of fees. But yeah, no, that analogy is great. There is no Bitcoin distribution center, right? There is no, that's a really good way to think about it, because I've never thought about it like that. That concept of wholesaling when it comes to financial markets, I've never internalized and thought about, but it applies 100%, right? And it's the same model, you know. And so, I'm just thinking in my head, where can I get some of this wholesale Facebook stock or wholesale Bitcoin? Well, I mean, you had an opportunity a few months ago, right? Like, that's the idea. So, but
That's right.
all right.
Sorry, I was on mute.
No, it's good. It's good. All right. That's a good place to wrap it up. Awesome. Appreciate it, Ted. We
Yep.
will talk to you guys tomorrow. Obviously, do your own research. Nothing we say is financial advice. If you enter these markets, you're doing so at your own risk. And then always make sure to do the proper due diligence and research before you do anything. So we'll wrap it up there and see you.